Hello investors, I'm Stuart Cruz. Welcome to Cruz Asset Management's chart of the day. Today we're going to be talking about KAM's iQVP portfolio and some trades. iQVP stands for International Quantitative Value Portfolio, and we've come to this strategy and this system by asking the fundamental question, what characteristics of companies tend to lead towards outperformance a year from that point in time? And let's buy those stocks with those characteristics today. So today we're going to talk about the two trades that we're going to place, two buys and two sells. So it's an international portfolio. So up on the chart, I have Schwab's International ETF, equity ETF, and year to date, or actually 1 year, we're looking up just 0.5% year to date. We'll switch that to it's down almost 4%. But let's look at the year numbers here. Go. So that's Schwab's International ETF equity. And if we add Wipro, which is a technology and IT servicing company, and we add CRH, which is a home building company, which is no surprise. Yesterday's video talked about home builders being in good momentum, having some of the highest momentum sector out there, even ahead of technology over the last 3 months. So here you have CRH as two buys that we're going to add in there. And then if we look at the two sells, that's GlaxoSmithKline, GSK, and China Telecom. As you can see, both of those, GSK and China, have underperformed pretty consistently. They basically got triggered out of our technical stops. So we have technical stops in our names, and if they underperform from a momentum base and technically, then we basically pull them from the portfolio, because if the money's flowing out of the company for whatever reason, we don't even really have to know the reason, follow the money. If the money's flowing out, we probably shouldn't be in that stock. So both of those names got stopped out, and here we are replacing them with two new names. I'm going to look at some PE ratios as I often do. So let's click on the PE ratios here, and let's take off the prices. So here we got the PE ratios of CRH and Wipro are a little higher in the 20 PE range, but definitely well off the 40 PE range that we see some of these other high-flying companies like Apple approach 40 PE, even though its revenue growth was only 2% and 11% over the past 5 years. So here we're at a modest 20%, where GlaxoSmithKline and China Telecom have been kind of falling off. So basically, they've been falling out of favor. And if I look at the percentage return, these PEs have contracted quite a bit. And what that's saying is the market's basically saying it doesn't really look good for the future prospects of these two particular companies. And so while we want to see some PE expansion, we don't want to see it expand to a point that's unsustainable, right? So there you have it. We have two buys, WIT and CRH, and two sells, GSK and CHA. And that's Stuart Cruz from Cruz Asset Management reminding you, don't forget to invest with the odds in your favor.